Well, look, let's get started here, man. I would
Sure.
love it. I mean, I'm such a huge fan of you guys. Really excited to
Thank
get to
you.
the conversation. Why don't you kick us off with a little intro and for anybody that doesn't know about you guys and just tell us a little bit about yourselves and why you guys are different from your perspective.
Absolutely. And I do need to say I do enjoy the weekly Uncle Sean's weekly update. So great piece. I appreciate the dad jokes since I've got two daughters, so they keep me humble.
Good.
So I started my career at Deloitte. So I'm a numbers guy at heart. I spent about 8 years at Deloitte, and COCC was an audit client. So I was on that audit. Got to know the CFO and the CEO pretty well. And when the CFO retired, the CEO approached me and said, "Hey, you'd be perfect for it. You've been working with us for years and years. You know our business. Would you like to be CFO?" And I kind of thought about it. I wasn't ready yet to leave public, but I did know there's lots of advantages in private industry too. So I made the jump. I left Deloitte in the 90s, joined COCC as the CFO, and then was lucky enough 6, 7 years later, the CEO announced his retirement. The board did a search. They included me, and I got the job in 2002. So interesting enough, the company's been around since 1967. That's almost 60 years. I'm only the second CEO in the company's history. So
Oh,
my predecessor served for 35 years. I'm going on 25 years as CEO. So we've had remarkable longevity, which is a huge benefit for our clients and our employees. I think our employees really appreciate that longevity. So, the model has been client owned since day one. So we are 100% current client owned. So there's no outside ownership in COCC. So there's no individual shareholders. There's no non-affiliated clients as shareholders. Every owner is a current customer of COCC. And we've got about 210 total clients. About 160 of those are core. And we again, our initial customer, we've got one client, Windsor Federal Savings Bank, that's been with us 59 years, which is really amazing. And I think the strength has always been the fact that we're a client-owned cooperative, and it's truly a partnership. All of our clients really just regard us as an extension of their back room, and it's much more than data processing. Obviously, it's a technology partner where we're in many times running their networks. We're doing marketing analytics for them. We're doing obviously the digital. 95% of our core clients use our digital solution, which is huge. But we're also open to integrations. So we like to say we provide options. And in many cases, we talked a little bit about mergers and acquisitions. If there's an existing relationship or a contractual relationship, we'll integrate to another digital provider on behalf of the bank, with the hope that we'll get them over to our system down the road. So it's been kind of, just steady growth over the years. We've been growing our revenue 8 to 10% a year, 8 to 10 new clients every year. And mergers, obviously, some on the winning side, some on the losing side, but we hope that kind of nets out. And we continue just to grow steadily. Last year, we're about 250 million in annual revenue.
that's great. Really cool. I have to say, for a long time, at the earliest part of my career, I kept running into COCC banks, and it was really wild. I just had never seen it or experienced it before, where those banks, you're like a first principal for them, right? They think about working with you and everything with you and talking to any third party or anything else. It's all back to not just you at COCC, but the whole team, right? Of all the banks. And
Exactly.
it is an entirely different, I guess, feeling would be the best way to put it. And I remember just being so shocked by it. I'm like, who in the world are these guys, right? And I'm a couple years into my career, and then I've gotten to watch that over years and years. And I just got to give you a big kudos. It's so different. Everybody talks about having a company that's a family and our customers are like family. And I mean, you guys really have that. It's really different, and you do a really good job on the technology side of everything as well, right? So
Thank you.
it's not to your point, you hear something like 60 years and what might cross your mind versus the reality is very different. You guys do a
Yeah.
really good job on all the products and everything as well. Can we
Well,
talk
thank
a
you.
little bit
And I
on
take it
service?
as a compliment because we've been referred to as a cult. And
Love it.
our customers, I take that as a compliment. And again, we do things very much differently than our competitors do. All of our training is free. All of our shadow days, which are really system analysis. Are you using the system the most efficiently? Are you adopting best practices? We do all that work at no charge, as much as the client wants to engage. And there have been cases where, some of our clients have lost loan processing people to maternity or unexpected termination. And we've actually gone out and staffed at the bank with our people, loan processing areas to get them caught up and lend our staff out that way. We've got great stories like that. And I should mention, with you folks being from Texas, we are a regional provider. So, our model works best in the Northeast. To stretch our model, out to the West Coast, doesn't really give you the type of partnership and culture that we strive for. So all of our clients are in the Northeast. We do have clients as far as Illinois, Tennessee, Kentucky, but the majority are in the New England and Northeast states.
Yeah. No, that's great. I'd love to touch on something that I think is a heck of a topic right now, and I'd love to just get your just perspective on this. In the theme of, let's just call it customer service, right? And I mean, better than maybe very few people know how much really goes into service. And you guys do a stellar job at level of service. But contrasting, not to throw any darts at any other providers, but it's a moving target, and some folks have certainly had some struggles, right? With that in mind, in this same era where a lot of the banks, and you just hear way too much in the news cycle about cost cutting and things on the technology side, and I'm starting to really, really see that correlation is it ends up being level of service, right? Over a handful of years, and you watch them close enough, and those banks that have made changes or really tried to cost cut, ultimately, I'm getting that same call from those banks a number of years later saying our service is terrible, right? Are you seeing that trend, and how do you think about that?
Absolutely. Yeah, 9 out of 10 RFPs we get are because of service. And that's the reason the bank is looking. Now, there are other factors, obviously, modern technology, partnership, flexibility,
Mhm.
having options, all important in an RFP. But the majority of them come to us saying we're not happy with the service. And for us, that's a really simple thing to tackle. It's people, it's talent. And, I know the stories of some of the mandatory callbacks that some of our competitors have done, back to the office. That's created a lot of turnover, and that turnover is bad business for service. And that's where I think we excel. We've got very low turnover, very experienced people, and our workforce is totally hybrid, with a majority of them coming into the office 3 days a week, working 2 days remote. But we've got almost 250 employees who are full-time remote. We never see them. They're in states across the United States. And so we committed to really the talent level and said, if you got talent, we want to keep you here. We want to be flexible. We know that'll pay dividends for our banks because working with experienced people, conversions is a great example. We've got 5 conversion teams. The average tenure is probably 15 or 18 years on that team.
Wow.
So all those teams have been with us a long time, and you can't do a quality conversion with new people.
Mhm.
It's an experienced person's role. You got to be able to be flexible. You got to work very closely with the banks. And I think, again, winning that talent war, which is what we've been doing, totally translates to our great service.
That's a great call out. I'm seeing, you probably remember this, for years and years there, it was like bank core conversions rolled at just about 2% every year, like clockwork. And then last year, let's say three, maybe a little change. And I mean, looking at this year, I wouldn't even want to throw a dart how many we're just seeing pop up. I mean, I'm just talking about the organic sales side. If you add in the M&A side, it's through the roof. And I mean, we're seeing implementation queues that are out multiple years all over the place. It's really, there's a heck of a backlog that's stacking up. And I don't know how much the banking community really factors that in. I would say, and this is, I can't even believe I'm going to say this, probably 3 years out on contracts is the right time to start having conversations, right?
It's
That
certainly
was, that was
two.
why.
Yeah. Yeah,
Yeah.
certainly two. But we look at, you mentioned the backlog. Yeah, there's a serious backlog all the providers have because there's a lot of change in the industry. And it's not just the digital side or the post-COVID side. It's really the need for modern technology so the banks can really execute their strategies. And you have to be flexible in this business. We've got more RFPs now in-house than we've ever had in our history. And again, we don't have huge signing goals. We want to sign 8 to 10 new clients a year, which is perfect for our growth. But to do that, we've got to juggle 50 or 60 RFPs at a time to get that close rate. So it is very active. I think all the providers are seeing it. It's not just the modern technology, it's the disruption in our industry. There's a lot of disruption happening, certainly with the FinTech players and being able to adopt new technology. So, we've got a good mix. We've got a great modern open system built on an Oracle database with a Microsoft .NET front end, a very modern user interface. And we've got a digital system that really is just a window into the core. It uses the same database as the core. So you're not juggling maintenance or different databases. It's really just using the core information. So I think that solution's really helped us differentiate ourselves and also get us a lot of on the forefront, some of the technology needs that banks want to upgrade. There's still some, and there's still some old legacy systems out there, both on the digital side and certainly the core side.
Yes.
And it's hard to progress technologically when you've got some old iron behind you and you're trying to do great things. So we hit kind of the right speed of the market where we got great modern technology, but we offer a partnership and service to complement it.
Yeah, I still occasionally, I'll have one of our younger employees come up and like, have you ever heard of this product or seen this contract? And I'll see something that I have, and I was probably 20 the last time I saw that, like, wow. I hadn't thought of that in a long time, but there's still some stuff out there, right? And it's an interesting time of change. To that point, would you talk a little bit? We can kind of do the good and the bad, but what are the things that you're worried about that are just, maybe existential threats for the industry? Just things that you're worried about, and then also things that you're, hopeful and excited about. And maybe some of those are the same, right? What's keeping you awake at night, good and bad?
Yeah, certainly consolidation. I firmly believe community banks are the backbone of so many small towns in this country, and big towns. So, we're in a state, Connecticut, that's a small state. It wasn't that long ago, 10 years ago, we had 60, 70 community banks in the state. We're down to 20, 25 right now. So I hate to see it. I don't mind seeing the mergers when community banks survive and they get to maybe $1 billion or $2 billion and they're relevant. But I hate to see them disappear in the small towns because in many cases, they're keeping that whole town afloat from a charity perspective, a volunteer perspective. So we're a big believer in community banks. We like to see them very strong. Again, I don't mind some of the scale issues because they obviously need scale. If you're sitting there at 80 million, it's going to be hard for you to keep up. So we understand that. But again, that is something that does keep me up at night, that the pace of consolidation seems to be increasing. And certainly the non-financial players, the Walmarts and the Metas and all of the non-bank competitors that are really trying to get that deposit and payment system away from the banks. I think, the banks have to hold on to the payment system. If they lose the payment system, it's going to be many, many years of heartache for everyone. So I'm big on payments. I keep it up on payments, making sure the bank is at the top of wallet for all the payment information. So those are kind of two things that keep me up, but there are opportunities with those too. Like you said, I mean, the fintech opportunities have been fantastic. We used to again have, custom development where, we would take, a while to develop some functionality. You could find that sometimes off the shelf now from a fintech partner.
Mhm.
And because our system's modern and we have great API technology, you can integrate that very quickly. So all of a sudden we turned a weakness, which is a one-off that may take a long time to develop for one of our customers to, hey, you could pick this off the shelf, we'll integrate it, and you've got your product in 3 months. So that actually has turned into a nice opportunity for us. We've got hundreds of fintech integrations we've done with fintech partners through our API technology. So that's been exciting. And that's when I talked about the old iron, right? That's where they struggle. That's where our bigger competitors struggle is they can't be nimble with those integrations, or they price them at a point where it's not attainable.
Yep.
You got to price them right, and you've got to get speed to market for your customer. And I think that's what we've been doing well and created an opportunity now, partnering with fintech companies. They don't have to be, foes, they can be friends.
You bet. You bet. I really appreciate what you said on the payment side. It's funny, still far too often on kind of both sides, whether you're talking with banks or the technology side, everybody just thinks loans and deposits. And I'm like, hey, payments is pretty cool, right? There's some real nice opportunities and some real revenue plays, and it's a strategic and systemic part of all of our go forward strategy, or it should be. So that was really refreshing to hear that as a first
Mhm.
principle. And I think to your point also, when you look out at this concept of providers working with third parties and just saying, whether it's me or somebody else, we need to get best of breed and help our customers be competitive. And I think for too long, I don't want to throw too much fault out there, but we had a cycle there where some of the bigger folks just got really, really big, right? And I mean, lots of them that just kind of surrounded the organization. And you can imagine, right? I know you can, as you start thinking about roadmap and revenue and everything else, you actually could be in a position where you kind of smother the customer a little bit and don't think about the customer and what they need to be doing for their customer. Selfish, for lack of a better term. And I don't think that, maybe this is the hopeful part of me, I don't think that everybody really thought about it. It's just the normal cycle of business. And I think at the last 5 years, everybody's kind of looking up saying, whoa, maybe we're actually being a little bit of a detriment to the banks, right? In some of these business practices. And well, that's kind of I guess it's a bumpy story. It's a little bit hopeful that I feel like everybody has that in front of them now, right? And hopefully that yields some better opportunities and success in the future.
You have to get over the pride factor. And it dawned on me probably a decade ago that instead of being a barrier in fighting these integrations in fintechs, be a friend and enable them and let your customer decide and give them the option. We've got all the surround products that every other core provider has. And I love it when one of our prospects selects all of our surround products with the core. But we have options too. And it took us a while because we had that pride too. It took us a while to realize, turn that into a strength that you have other options, that your customer can decide which digital partner they want to partner with, or which, loan origination system they want. We've got one. We're proud of it. We want you to use it, but there's 20 others out there in the industry. Go ahead and choose the one that works best for you, or one that you're comfortable with. And the bigger firms, again, they have a hard time doing that because those are all profit centers for the company. And we're, again, a cooperative. We have the luxury of not being driven by quarterly results, by shareholder price, by growth in revenue targets. I'm driven by happy customers. So my board, which is made up of our customers, wants, happiness is their most important, measurement. We got to make money. We got to reinvest in our technology. We have to hire and keep talent. But in their minds, because it's a cooperative, the most important measurement is, are our customers happy? And that kind of simplifies a lot of things, because I'm not worried about how many training resources I'm sending out to a client and what's that costing me, or how long is this conversion taking? How much, backup are we doing post conversion for the bank? I don't have to worry about that because it's not a profitability measurement here. It's about client satisfaction.
Well said. Well said. I think to your point too, the digital or the technology footprint at banks has gotten so much bigger, certainly the last 20 years. And I think, going back to the beginning of where we talked about service, so often I hear from banks that are really having trouble just getting everything to work and play well with each other. And I would say so often, maybe it's a little bit of a challenge, but everything can and will work, maybe with a shade of gray. But being able to get the support to actually get everything to work is sometimes a very different story, right? And I can see that in your model that it may not be the most popular thing in the short view, but in the longer game, that level of service is a great reason why me and my bank should want to come and have more products with you, right? Because you'll make sure that it all works and you'll get me there. And I can see that's really worked well for you guys over time. And I just, hey, salute you. That's a great thing.
It's an underrated part of looking at a core provider is their implementation services. And everyone's starving for staff. Everyone could use more staff. All the banks are trying to do more with less. Having us as a partner helping them implement technology is a huge, huge advantage. We have a project manager we assign. We do all the smart sheets here. The bank's got a view into it so they can see where all the items are on the project. So we run as their outsourced, project manager on implementation services. So that really helps us implement things like RTP or FedNow or whatever they want to do. They can rely on us to help implement. It's really an underrated part of a core relationship is if you can do great implementations and partner, not just changing core. I'm saying 10 years later, when they want to bring on marketing analytics, or they want to bring on, a new loan origination system or commercial origination system, help them implement it. You're going to look good. We're going to look good. And you get a project done on the check mark list that the bank, is appreciative of. So we've always been very good at implementations. It's resource intensive, but you've got to invest in it. And that's been a big part of our customers' happiness.
Great call. Let me give you one more. And this one is one that I'm more recently doing, just working through the data and really, really doing a lot of research and trying to find a way out. I'm very concerned about it. And let's just call them product sunsets, right? And so as we see consolidation on the bank side, it's like our whole industry hasn't realized that as if we're consolidating on the bank side and there's trouble there, then it's going to be the same thing on the technology side, right? And whether that the impacts are to products or revenue or product sunsets, and we'll call that forced migrations, right? And as I look forward, say the next 10 years, if I had to just really simply put it, whether we picked core or digital or, loans, account opening, et cetera, those products and being, having a product that's going away and having to switch, being forced, basically your roadmap being forced on you, right? That is a real challenge, major resources. And I would say, as I've just been digging through and looking at providers, certainly those that are very, smaller institution heavy, there's a real risk in that churn, right, for those folks. And we're seeing some of that beginning to happen. My thinking is, in the next decade, there's probably going to be a third, maybe half of the banks that are very heavily impacted on being forced, right, to change as products are sunset and migrated. And if you had to pick sort of the winning half and the losing half, a little bit of a light bulb for me, right? That I don't want to be on sitting in a position where I didn't know and I get bit, right? Does that make any
Yeah.
sense? You see where my head's at?
Yeah, it's actually a shame because we've had so many of our, partners who were great solutions get gobbled up by bigger companies. And it's I know it's the public thing, it's the way, our capitalist system works. But it does, hurt a little bit that, we've got a great partner who's doing a great job, who's got a great culture, who's embraced by their clients, and then a big company comes in and just absorbs them, and you lose that culture. And it's an unexpected project for the bank when they've got something they like and are using and is successful, that now is being sunset because it's a bigger company. They got overlapping products, and we're using this product now. We're going to sunset that one. So you're right. You're on the right trail. It is a risk. It's happening more and more. Unfortunately, it's our system where so many of these startups are angel investors, they're private equity, they're investors that are looking for an exit strategy at some point. And the exit strategy in our industry is always sell to a big provider who's got, lots of capital behind them and lots of revenue. So it is a threat. I can go down a long list of great small companies,
Mhm.
in the last 4 or 5 years that have gotten gobbled up and they've changed. And it's on us. Again, for us, it doesn't create a huge problem because every surround product has a bunch of options. We have one. We may have two. We may have two or three other partners that you can select. And if one of those partners goes away, all right, now you only got two to select, but maybe there's a new one coming on. So for us, it's more about continuing to provide options for our banks and not marry them into just our solution, because that does cause a problem. If we've got to sunset it and we don't have any options, now you got a problem.
You bet. No, it's a real problem. And I think a compliment to your model, one that hopefully we all could hear and take something from. You guys really have it dialed in, over, hey, 6 decades, right?
That's
Uh,
right.
I mean, I really appreciate everything. I do want to give you the last minute for final thoughts, though. Anything else that's on your mind?
Tanner, I appreciate the time. You folks do a great job in the industry with good consultative information. I love it's about numbers and facts. It's not opinion. So I love the tagline. For us, again, it's just steady, constant progress. Keep growing our revenue, bring on new clients, keep our technology, fresh and modern, and do right by the customer. I get involved at least on a weekly basis with a customer who's got, a strategy question or an issue or needs help. We're about solving problems. And as long as we continue to solve our customers' problems, we'll be successful.
And you guys have been. And thank you so much. And just know you're very, very well thought of. It's incredibly deserved. And thank you for your focus on community banks. Really appreciate it.
Thank you as well.
All
Have a
right.
good rest of your day.
You too. Bye bye.